All right. Hola, guys. ¿Qué paso? How's everyone doing? This is Hala Pablo. Thank you for tuning in. Let's look at Bitcoin. Let's do a quick Bitcoin analysis, see what's going on now that it's moving, now that it's grooving. Let me kind of keep you up to date on what's going on. We've been tracking this thing since, I guess, early December, and it hasn't disappointed. These two schematics have played out tit for tat, in tandem, lockstep, with degrees of deviation. And so we have the 2021 B subcycle on the left and the current on the right. Now, I went ahead and just marked the double bottoms of some of the features on the chart. So you could see the deviations of the waves. There have been deviations, but the general trajectories have been jibing, have been correlating. So we see this one and the two here on both. Now I had this on the 1 hour and the 2021 subcycle be on the 3 hour, but you could see everything here. The tops, this mid-channel trend here with the two double bottoms beneath. You see how the waves have played out on this. That's the first one, and here's the second one leading up into this regression trend, or this UTAD, which created the all-time high. We saw that here as well with the diamond figuration underneath. Here it was much more compact. A lot of the waves are just smaller back in 2021 compared to today. There's much more liquidity now at play, so that's normal. But overall, the skeleton is the same. There's a lot more muscle. There's a lot more sinew and ligaments and fat and all of that. Adipose tissue on these waves today. But if you strip everything away and you get to the bare minimum, the skeletal frames are the same, and that's what we observe when we do these forensic comparisons. And so we see the UTAD playing out here with the enlarged waves here, engorged waves, just because of the liquidity. But we see the same kind of ups and downs, pullbacks and rallies coming down. We saw the double top here, the double mitigation. Here we had this one just horn that came up at 109 Gs and then sold off. And then we had the rising wedge here. Here's a rising wedge. See the comparisons of the rising wedges. The skeletons are the same. The skeletal format's the same. It's come up. It's created an LPSY, last point of supply. This is textbook distribution here. And then we had the sell-off. That's the sell-off here, and the sell-off could be traced as an ABC correction. If I take away this ABC, you could see it perhaps more clear on both. I went ahead and circled the B wave, the counter correction. So on both, the only difference is in 2021 it was under the anchored VWAP. Today, this year, it was above the anchored VWAP. But it went back. It was on its way down, and then here it fell through the anchored VWAP back in 2021, and then it fell through. It fell through conclusively, I think, just recently. That's really been the main point of difference of where these two have differentiated from each other, was in relation to the anchored VWAP, to the price action, these redistribution waves in relation to the anchored VWAP. Back in 2021, it all transpired beneath the anchored VWAP. This year, it's happening kind of above and below the anchored VWAP, is kind of going through it like a mid-range kind of 0.5 Fibonacci line. So we see the equilibrium, but as of late, it's gone under, and the homeostasis, if you will, of the price action is beneath the anchored VWAP. So the bulls are beneath the anchored VWAP and endeavoring to come back up into it. But once they do that, they encounter this gigantic micro trend resistance line, and all the efforts are just diffused, and lo and behold, they go back down underneath the ice, so to speak. So we trace it from this B wave, and then we had this kind of, I guess it's like like a mini bear flag here, and then we had another double bottom there, and then we had a lower double bottom in 2021. You could really see this sell off here, but this is a double bottom, and we see the play out here as well after this this descending channel, or this bear flag, kind of bear flagish kind of looking area, which is actually, by the way, the second LPSY in the Wyckoff distribution, because we still haven't gone through the macro trend resistance. And so what it's doing is it's forming another redistribution range with two double bottoms. We see the double bottoms here, just not as delineated as this year. And then we came back up into this area here of like very narrow spread, very, very little narrow spread. You see the spread, it's the same, right? After it came out of the second double bottom, and now both of these schematics are beneath the ice, beneath the anchored VWAP, and we've had several attempts, just like we had several attempts here. We had 3 attempts. These long upper shadows are showing the prevailing of the selling pressures prevailing, and it was pushed back down. All of this occurred underneath the VWAP, but here we've had this real meager effort here, as you see, with these 2 little attempts, and it was no dice on average to low volume, kind of like what we saw here. Although we did see predominance of supply, and here we're seeing again, even these vertical bar volume spikes are kind of in the same place too, and they're both supply, as you see. Now supply is building. I think that's pretty apparent. If you look at the vertical bar, supply is building. Supply here is building as well on the macro. And then finally we had this capitulation where we've come down. And now this area here is considered the sign of weakness on a standard Wyckoff distribution chart, on distribution schematic number 1, and as well as on distribution schematic number 2. It has the sign of weakness in the same place after the second LPSY down at the bottom of this regression trend, where we have the sell-offs from the upthrust after distribution, which in both cases for this period this was the all-time high, and of course this for this period this year was the 109 grand UTAD all-time high. So as you see, the waves have been kind of playing out in cookie-cutter fashion almost. Just the degrees of deviation and the trajectories are different and varied, but like I said, the skeletal format is the same. You just have to look at it forensically, and I think it's clear. So now the question is, where do we go from here? I think this has played out so far pretty much lockstep. So I cut this off, obviously, where I think we are now today in this sign of weakness. This is real time over here on the right, obviously, but this has been trimmed to kind of resemble where we are now. You could just look at this and see how it's playing out. Like I'm telling you, you could take someone who is not familiar with any price action at all, doesn't know anything about Elliott Wave or Wyckoff or Fibonacci or any of the oscillators or anything like that, just a cursory glance of this, and they could see sort of the resemblance of it, especially when you start accentuating the different features of the redistributions. It's kind of undeniable. Now, I admit at some point this is going to diverge. Like I've mentioned to several people, they're saying, how can you keep going off this schematic? Well, my answer is I'll keep going off it until it gives me good reason not to. And so far, it has given me reason to stick with it. I mean, look at this last area here that I encapsulated within this rectangle square kind of area here, both underneath the anchored VWAP and with the attempts. That's what makes this area special. It has the attempts. This is the last kind of effort by the bulls to do liquidity sweeps, to try to get up and prevail through the macro trend resistance. And notice that it started off with big sweeping spikes up with long upper shadows, but then it was kind of relegated to this narrow spread area. We see the same thing here. This narrow spread, especially towards the end when we have this, when we have the pullback, the spread is just narrow, but it's still making attempts at the macro trend resistance. Most notably are these last two right here before we had the sell-off. And then we see in 2021, we had this last long upper shadow before it embarked upon the sign of weakness. So what happens now? That's the big question. What happens now? Well, we definitely have predominance of supply. There is no way around that. There is no negating that. We have predominance of supply. And for the bulls to just flip this thing now and to just suddenly bust through, back up through this macro trend resistance and back up through the ice, back up through the anchored VWAP, and like I said, break this macro trend resistance line and create an all-time high, it would be pretty impressive. I believe that would be an anomaly. I don't think it works like that. At some point, we're going to have to, the good news is we're going to find bottom at some point. We found bottom okay, so before, I don't want to get ahead of myself, we'll go ahead and play the bars from 2021. What happened after this and the sign of weakness? So it continued the markdown, and then as you see, it found some semblance of support here in this area. Now, if we do the Fibonacci's off the swing high and the swing low from this regression trend, I believe this is somewhere around the 618, the 618 Fibonacci retracement. We're going to draw the fibs in a moment. I don't want this video to go on too long. I'm trying to abbreviate these videos, truncate them, so I don't lose. I know there's a lot of people, they only watch 5 minutes of this stuff and then they click out of it. And so I'm trying to make it more engaging, shorter, truncated, just with the vital information, short and sweet, and then get out. So, but I did want you to see here that we found some semblance of a consolidation. Now, whether or not, back in 2021, they didn't know whether this was going to be, if this was redistribution, just another area like this, like another last point of supply before another leg down, or if the market makers here were in fact reabsorbing Bitcoin with the end game of putting up another leg. And so, of course, we know in hindsight that this was a redistribution, but this might be where we diverge, just depending on what happens when we find bottom here, wherever this place bottoms out. I think we're still going down. Now, I'm going to stop this now because it's pretty clear what happens. It puts another leg. This is actually the beginning of that macro bear market that took it all the way down to like $16,000 eventually. So I certainly don't think that's on the menu for us this year. But I do think, like here, let's go ahead and just pull a quick fib, and then I'm gonna sign off. But we're gonna go off. Let's see, the low of this double bottom here before we went back up to retest the macro trend, and then I'm going to go to the top of the LPSY, not the UTAD, and then you find out here. Okay, so here's the 618. So it's kind of between. It's consolidated. It found bottom here, right before the 618, and then it started to reconsolidate between the 1618 and the 1.272. That's usually the golden area there. The 1618 is the golden, but the 612 is usually where, if we have a selling climax, where the automatic rally comes back up to somewhere around the 1.272. So that's what happened 4 years ago. Let's see what could happen this year if we go off the same metrics. We're going to take the fib retracement. I'm going to go off the low here. I'm not going to take the lower shadow. I'm going to go to the actual body, and I'm going to bring this up to the LPSY, the top of the LPSY. Again, not the UTAD. And it's going to take us to somewhere between 88 Gs. That's the 1.272, and the 618, which is 84.1. Okay, so usually it doesn't go all the way down to the 618 because market makers know that's where people put their limit buys there. So like if they put it just slightly above it, it means that they don't get their orders filled. So I'd put it slightly above, say like 85 grand. 85 grand is where, if this thing just keeps keeps marking down like it did here. We kind of had like this A, B, and C at this sign of weakness. If we continue playing it out here, and there's no reason why it shouldn't. I mean, we're just not seeing demand come in at this point to kind of change our mind otherwise. Once this thing starts falling low enough, it's going to trigger a fear. It's going to trigger FUD, and that's what's going to enhance the momentum of this pullback. And so we could really see this falling down to somewhere between, like I said, 88 grand and 84,000. Somewhere in there, I envision or I imagine like a sweet spot of reconsolidation. And that may be the area where we diverge from these two schematics. Just depending when it reaches that area, I'm going to be doing volume spread analysis at the forensic level in my group. In my group, I'm going to be doing it. And then, incidentally, once Bitcoin falls, if it falls down to this 618 Fibonacci retracement level here, I suspect that the Bitcoin dominance will also have fallen by that point back towards the levels where it was back in December when we had that little window, that 1 week window where the alts were all flying, the meme coins and the finance coins and all that good stuff. The Bitcoin dominance chart seems to be putting out like a double bottom. I know it's in a rising wedge at the moment. This is Bitcoin dominance over here on the left. We can kind of look at it just real quick before I sign off. I'm already going on too long on this thing. But you see this rising wedge kind of pattern here. This is going to break eventually and come back down, I believe, to retest this support line, this macro support line. This area here at the bottom, at the beginning of this wedge, this was when altcoin season, or like that little window, if it can even be called alt. I don't think it was altcoin season. It was just Bitcoin dominance was so low that, and the altcoins just kicked in. This is that first week of December. You see where it hit this low. That was on Wednesday the 4th. And then when the dominance started rising again, it was the 9th. So it was kind of like this window here. So once this rising wedge breaks and this thing marks back down, I believe, to retest, this would be the selling climax automatic rally. If it comes back down for a secondary test and creates, as it were, like a double bottom, then that would make perfect sense for the commencement of and the resumption thereof of the altcoins that we're all anticipating. So let's keep our fingers crossed. But in the meantime, we're going to look at Bitcoin and we're going to see if it continues to mimic 2021 as it has so far, and create a bottom, create a reaccumulation or an accumulation range around that, that sweet spot of the 1618 Fibonacci level around 85 Gs. So that's what I'm looking at. Surely if we tuck down beneath 89,000, I'm going to start averaging down into Bitcoin, buying the lower Fibonacci retracement levels, and just with little incremental bites, scaling in little by little by little by little. And if we bounce and reverse from there, that's all fine with me, because I'll already have skin in the game by then. I'll already have hooks in it, so to speak. And so if it runs, then I'll just play that momentum. I believe in any case, Bitcoin will come back down to whatever the lows are and retest it, which is what usually happens as the market makers begin their reaccumulation or their reabsorption campaign. So that's what I'll be looking for, just mirroring the actions of smart money. So if you got anything out of this, this sort of technical analysis, like, subscribe. I'll keep you safe in the markets. I do my best. And, in any case, you could always profit and learn off these videos that I upload on YouTube. If you'd like to take your trading to the next level, chart reading analysis, check out our Discord trading group. Once the alts dip down to this level and start, or rather, once Bitcoin dominance starts to decrease and falls back to its lows here, then the alts are going to ramp up, and I'll be doing my altcoin charts. But my altcoin charts, I'll throw a few freebies here on YouTube to kind of wet your whistle, but the bulk majority of them will be in Discord. So you might want to check us out if you're looking to not only stay safe, but be exceedingly prosperous in these crypto markets. So I do very well with the alts. So anyway, all right, guys, that's enough. I've gone on way too long, as usual. I'll talk to you later. And none of what I said is financial advice, except this. Be safe in the markets and do the smart money thing and subscribe. You won't regret it. All right. Talk to you guys later. Adios. Bye-bye.